You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SEBO. The Option Block is brought to you by SEBO. When it comes to trading volatility, trust SEBO, the creator of the VIX Index, for in-depth and relevant information. SEBO's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back in session. Another trading week to look forward to. A lot of fun in store for us this week. Looking forward to it. Kicking it off, as always, with your bi-weekly options extravaganza known around the globe as the Option Block. My name, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you have been just munching down on these days. Keep munching. We'll keep paying the bandwidth bills. We don't mind. Of course, if you do like what you hear, throw some stars, a rating, review, a like, a comment, whatever your platform lets you do. It does help new people discover the content. And of course, if you want more content, and who can blame you, theoptionsinsider.com/pro, the place to go. Going to be giving away the July Pro Trading Crate this week, so stay tuned for that. All you pro folks, hold that little ticket in your hand. See if you are the winner chicken dinner this week. Of course, if you want to be the winner for next month's crate, theoptionsinsider.com/pro, the place to go. As we go to see who's joining us on the old program today, I am joined on the Monday episode by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, as well as by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. I introduce them now, listeners, because it is Monday. It is time to commence our broadcast week with a little bit of fun, a spot of whimsy, if you will, because it is time for our 80s Wrestling Trivia Challenge. All right, listeners, I am in an especially wrestling-themed mood because I just came back this weekend from a sojourn to Detroit, good old Detroit, to Ford Field. Why would I go to such a place? Because, listeners, myself and 60,000 other wrestling crazies were there to see SummerSlam this year. It was pretty crazy. I've never been to a big, crazy stadium WWE pay-per-view show like that before. That was certainly something to behold. 60,000 people losing their minds over various ins and outs going on in the ring. A fun time was had by all, and it got me thinking about the origins of this event that is known now as the biggest party of the summer, a.k.a. SummerSlam. I'll give you a little bit of backstory on it, listeners. It was started in August 1988. It was created by the WWF to try to counter-promote. One of their few rivals at the time was Jim Crockett Promotions, and they used to have some regular pay-per-views, so Vince, never being one to miss a counter-programming opportunity, said, I'm going to create my own summertime event, and we're going to call it SummerSlam. They had the first one, of course, in Madison Square Garden. WWE was based out of New York, really, so made sense that they would have the first one there. I now open the floor to the unklest of Mikes, Mr. Uncle Mike TOSAW, and the greasiest of meatballs, Mr. Mark Sebastian, from OptionPit.com. If they can, name the main event of the first ever SummerSlam. Go.
Hulk Hogan versus The Undertaker.
Not bad. Mr. Meatball, what is your guess?
I think it's Hulk Hogan versus Randy Savage.
Okay, you both guessed participants in the match.
Oh, no, it was the Mega Powers.
Oh, against who?
They were against... who were they against?
Was it lesser?
Was it Andre the Giant and the $1 Million Man or something like that?
Yes, the Mega Bucks. The Mega Bucks versus the Mega Power. Wow, Mr. Meatball. Pulling that out of your butt or Wikipedia, wherever you went to find that. It was good.
I'm just... it just kind of came to me.
Yes, that was the main event of the first ever SummerSlam. The Mega Powers, Hulk Hogan and Macho Man. I mean, does it get more 80s wrestling than those two guys? I don't think so. Putting those two guys together in a tag team is almost too much 80s star power for one team, which is probably why it had to implode. And then against Ted DiBiase, a.k.a. the $1 Million Man, and Andre the Giant, known as I don't really remember the name, the Mega Bucks, but that's what they're called here. They won the match, the Mega Powers, because Miss Elizabeth took off a few pieces of clothing to distract Andre, and that's how they won the match. So Miss Elizabeth getting involved in the business back then. Always so family-friendly was the WWF. I'll throw it out there because I'm nice, Mr. Uncle Mike. I'll give you a chance for a catch-up of half a point. Also on this card was the Honky Tonk Man. He was in the middle of his historic 14-month-long Intercontinental Championship reign, has not been challenged until now. The person who holds the IC belt now is the first person to challenge Honky's reign. But he opened up his reign that night to a mystery challenger who came in and crushed him and took the belt in 31 seconds, sir. Can you name that mystery challenger who took Honky's belt?
Formerly known as the Texas Dingo Warrior, I'll say the Ultimate Warrior.
Yes, the greatest wrestler of all time. We all know this. The Ultimate Warrior. That was when kind of Warrior Mania really started kicking off in earnest when he won the IC belt. Everyone was like, whoa, this dude is something else. So there you go, listeners. What a star-studded event. Hogan, Andre, Macho Man, Ultimate Warrior. All of the favorites of 80s wrestling coming out for the first SummerSlam, listeners, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's get to it. A little bit of markets fun to go with our 80s wrestling fun. And you know what? Good thing we waited a little bit, listeners, because the market now turning green after starting off the day decidedly mixed. Of course, coming off the Friday session where it was pretty fascinating to watch. Of course, in the middle of vol views, we were talking about the market kind of rallying and a bit of a maybe head-scratching rally given all the news and, of course, the fact that Apple, the big dog that Uncle Mike was waiting for, coming out with some pretty dire results. Can't sell iPhones. That's usually not a good thing for the market. Market doesn't like to rally when Apple is red, and we saw that middle of the session. The worm turned, and all of a sudden we went from up maybe 0.75 of a percentage point in the S&P to turn into the dark side off 0.5 percentage point. So it was interesting to watch. It happened pretty much right between our vol views and options oddity shows. The worm literally started turning as we were doing our crystal ball on Friday for vol views. We put our predictions in, and within a few seconds, VIX was half a point higher. You know how that is, listeners. Vol can be capricious. And coming in today, we started the day mixed. The NASDAQ was actually down pretty sizably while the rest of the market's up. And now we're seeing everything ticking into the green. NASDAQ up about 0.25%. S&P up about 0.7%. Dow up a little over 1, about 1.1%. So getting back a lot of what they lost on Friday. Is this for real, listeners? Or is this just the next leg of this kind of weirdo upside head fake? We shall see. Either way, kicking off the show, we had VIX at about 16.25, up about 0.25 point from where we were on Thursday. VVIX at about a 98, so still looking frothy. Hard to blame it. Kind of hard to really have too much faith in what we're seeing out there these days. Up about 3 points right now, so back to threatening that triple-digit level. VXX 25 down about 0.4 point. UVXY 1870 down about 0.1 point, so not much going on there. SVIX 2680. This one coming off hard, off over 3, about 3.1 points from our Thursday show. So wherever he is, the once and future Dr. VIX, now weeping openly that his one core holding can finally sell off. UVIX 4.25 down about 0.25 point. That one getting back up north of a 4 handle finally. And then VolQ at a 19 even when we kicked off the show, down about 0.75 point. We will now go out to the winner of our 80s Wrestling Challenge. Mr. Meatball, sir, any other enduring memories of the greatest party of the summer known as SummerSlam, which was in your old stomping grounds of Detroit? Surprised I didn't see you out. Maybe you were a part of the 60,000. I don't know. A lot of people.
You know, that it's more my wife's neck of the woods than me itself. Yeah, I did not know SummerSlam was going on. I've been a little out of wrestling for the last few years. It just, I don't know. It just isn't grabbing me the same way it used to. But no, there's been some awesome SummerSlams. I believe, I'm trying to think of some of the really fun ones. Let's see. Earthquake. Remember, I believe there was an Earthquake Hulk Hogan redemption match when the Earthquake, broke Hulk Hogan's ribs, and they were selling Hulk Hogan wristbands so that you could, root on for Hulk Hogan. Meanwhile, which was completely fake. Meanwhile, the Brutus Barber Beefcake actually almost died, and WWE did nothing. That I remember.
Fan of the network, Brutus the Barber. Yes,
he was great, and he was just such a he had a lot of personality. I believe. It's always kind of where everything for SummerSlam is where we now know typically what the main event is going to be for WrestleMania. That's kind of what SummerSlam sets up. It doesn't really, usually give us the ending outcome of a lot of matches. Trying to think of any other big SummerSlam events that come to mind. But that's kind of the big one that I remember.
And what's catching your eye out there? Is another head fake today, or are we actually trending north again?
I don't know. We've seen this over and over and over again. We get kind of a midday sell, then we rally back, and then they could pull the rug out right all over again. I don't know. The market is certainly more bullish than it was last week. But Friday's turn was kind of shocking, and I'm out. I have to run and mail a package, and I get back, and the S&P has dropped 30 points. I don't know that any of these rallies have a ton of legs until we kind of get a little more. I mean, we got CPI this week. I think there's some. The 10-year note has really been kind of the driver of markets. And, it's had a nice rally off the lows from Friday. It is off a little bit today, not a ton. But, bond yields, I think, are what's been ailing the market. And it's going to be hard to really get on board with any of these with anything until bond yields start to figure out what they're doing. But really just kind of an interesting day. I'm not sure what to believe. I got to be honest.
All right, Uncle Mike, same questions for you. Any other enduring memories beside the Ultimate Warrior emerging as the greatest IC champion of all time? Fight me on that one, listeners. And then, of course, any thoughts on the surprising head fake? What were you thinking when we saw that turn to the dark side, that heel turn for the market, if you will, on Friday? And then C, what are your thoughts on today's rally? Is this to be believed or just the calm before another storm?
Well, in terms of SummerSlam, my enduring memory was Wembley Stadium. I believe it was 1991, where the Hawk and the Animal came out riding motorcycles to their match. I mean, that was pretty darn cool. Even though I know you're not a big Road Warrior fan, you got to admit that was a cool thing. In 91, Wembley Stadium, like 90,000 people, and they come out on the Harleys. That's a cool thing. Do you admit that that's at least cool, Mark?
I never saw that, but I'll take your word for it. Sounds cool.
Yeah, Hawk and Animal, you got to love the Road Warriors.
Yes, coming out on that. But yeah, that's my SummerSlam memory, and I think shortly thereafter, I think Hawk got messed up on drugs even worse than he was before, and then he ended up quitting the WWF, and then he had some problems after that, from what it sounded like. But that was the peak of Road Warrior Hawk's career, I believe, from what I could tell. If it wasn't, it was still a pretty cool moment. In terms of this market, I mean, yeah, this is one where we have a sell-off on Friday and a sell-off that really, to me, didn't make a lot of sense. I mean, we didn't really have any news. It was just like a lot of people rushing to the exit doors to try to get out. And there really wasn't there was no reason for it except for just fear. Or the old adage, there were more sellers than buyers, if you will. So we had that. And then for the most part, today's rally, if you will, is just kind of recovering the amount of what we sold off on Friday. So as of now, it looks like 4,500 is appearing to be another magnet for the SPX, at least at this point in time. We'll see how long the magnet holds. But that seems to be a number with which it's clinging to at this stage. Bonds, just looking at IEF, the ETF that tracks the 7 and 10-year treasuries, that's kind of becoming I hate to say it's the word bottoming, but we are towards the lower end of the range with treasuries right now. The last time we did go below this was October of last year, briefly. And I shouldn't say that. We were below it a little bit in November briefly. But for the most part, we're kind of at the lower end on the bond side, to where we're going to need to get some buyers, obviously, if we want to get the yields to go down. But if you're looking at stocks right now, if you're looking to get into something conservative, you want to get a good rate of return, you're not really concerned about inflation, bonds are not a bad place to be right now. At some stage, bond values will go higher, and you're getting a decent yield while you're waiting for them to go higher. So bonds are really not a bad spot to be right now at all, in my opinion. I haven't sold any covered calls on them in a while. But I did sell earlier in the year when we were at the higher end of the range, and still waiting a little bit before I would be interested in selling anymore. But while I'm waiting, we're at least kind of getting paid some yield to wait. So that's something that I'm seeing in this market right now. Apple got the bejeebers kicked out of it from earnings. Since we've talked on this show last, we were in the 190s. We're down in the 170s, I believe, right now. We're in the high. Yeah, we're at 178 right now with Apple. And it was kind of a thing to where we played that pretty conservative in our triple income portfolio because we saw covered calls on it. And we were in the money for quite a while, but 180 was our strike price. And so we just went out of the money. And so we kind of view that as we've been selling puts below it for a while, waiting for a pullback to get back into it. You get more money from selling covered calls than short puts right now, which we've talked about on strategy blocks before. But for right now, we're actually kind of excited for the pullback in Apple. We're kind of getting another chance to get back into it, if you will. Same's held true for Microsoft, in that Microsoft peaking out where it did a couple of weeks ago. We're back down in the 320s with Microsoft. So a lot of big names have pulled back. And just because of the concentration of the market right now, I believe that's a lot of what's given our little mini pullback in the market itself, so to speak. So I think it's going to be interesting now to see if other stocks can actually start pulling their weight in the S&P besides just relying on big tech to take care of everything. So will that happen? Will it? Won't it? Who knows? But we had a big rally in a lot of dividend stocks last year. They haven't really done much this year, so maybe it could be a sector shifting or an asset class shifting, whatever way you want to put it, to where that could be the next leg of the rally. We'll see. But for right now, I'm still in caution mode. And that's what I'm seeing.
Uncle Mike is cautious. You must be doubly cautious, listeners. Let's see if this caution is being reflected in the volume numbers. And the answer is kinda. Let's start in VIX land, as we are wont to do, listeners. And VIX looking kind of cautious right now. Sub 250,000 contracts. That's usually our barometer for it these days. 238 on the tape right now, so kind of light. We've seen it well over 100K more than that. And some days last week, far more than that. So pretty light today. I think VIX is kind of waiting and seeing, like a lot of people are, to see what this market is going to be today. The ADV still looking impressive for this time of year, 766. That's nothing to sneeze at heading into August these days. I mean, August usually, pretty much, you look at the calendar, listeners, you can look at August, you can look at December, and you could usually reasonably assume that those are going to be light volume periods for VIX. And right now, VIX remaining fairly robust. SPY, again, I don't even need to run it anymore. You know it's going to be somewhere around 4.3 million this time of the show, almost regardless of what else is happening out there in the markets. And it is exactly 4.3 million yet again. SPY, you can set your watch to it. The ADV right around 7.5 million. Seems like it's going to exceed that again today. The S, 1.55 million. So again, kind of similar flow there. You can usually expect it to be between 1.5 and 1.75 million out there. 2.75 million is the ADV for the S. Small caps, 447,000. So pretty much exactly halfway to its ADV, which is starting to threaten 900K again. 894 right now. So not back up north of a million yet, but starting to move in the right direction, at least for small caps. And the Qs, you don't need me to tell you, Qs put up numbers. 2.16 million in the Qs right now. The ADV, 3.4 million. A lot of that obviously driven by the whipsaw in the Qs. We were red in the Qs earlier, and now looking green out there. Will that stay for the rest of the show? I guess only time will tell, listeners. I know a lot of you are waiting to hear what's popping off with the single names out there. We are in it again. It is earnings season still. Big names popping off today and this week, and we are still seeing the fallout from some other big events out there. So let's get into it. Number 10, it's actually a fairly quiet day for the single names today, listeners. Only 198,000. That's what it cost you to break into the top 10 right now. That gets you to our old friend, the artist formerly known as Meta, making up for lost time, up about 4 2/3 today, trading 315.40 right now, up about 1.5%. Again, good for 198,000. That's fairly low to break into our top 10. Those are the kind of numbers we expect for August, maybe even a little bit lower. So we'll see if we can keep the volume train rolling. Number 9 is Nikola. We've been talking for a while about all this interesting upside, mostly paper in these second tier, shall we call them, EV names outside of Tesla, as we've been talking about all of them. You know, your Lucids, your Rivians, and of course, number 9, Nikola, good for 231,000 today. Looks like they're giving back some of that upside here in Nikola today, off about 20 odd cents today, 8.5%, trading right around 229. It looks like they crushed it as low as 207, and it was as high this morning. It actually opened around 2 3/4. So they're selling off almost 75 cents in Nikola. My goodness. So they are coming for that. On the way to Detroit yesterday, I did see a Rivian again in the wild. So starting to see those out there. Not going to see a lot of Nikola heavy-duty trucks out there yet. But intriguing stuff nonetheless. Trading right around 230 right now. So actually rebounding off its lows, I suppose, if you want to look at it, glass half full. Or glass half empty, getting crushed from 2 3/4 right now. Either way, good for number 9, 231,000. Number 8, out to PayPal. You know it's earnings season when names like PayPal start sneaking in to our top 10. PayPal today, right about exactly 250,000 contracts. The number 8 spot, up nearly $2, trading 64.65 right now. Looks like they just launched a stable coin, US dollar-backed stable coin. So that's what's accounting for this rally. You want to hear more about all that fun, of course, stay tuned for the crypto rundown coming up later today. Going to have a weird two-parter because it's actually going to be joined, I believe, tomorrow by the folks from Coinbase US Derivatives. something happened. They won't be able to make it on the show today. We're going to schedule them for a special crypto hot seat tomorrow. So a two-parter for all you crypto folks. Stay tuned for that. And again, on number 8, PayPal, 250,000 contracts. Number 7, out to the first half of the chip zone. It's AMD, trading right around 117, up about $1.15 today. Again, good for 335,000 contracts. Number 6, a name that features in our question of the week this week. It is the king of the apes. It is AMC, 404,000 contracts. Up about a quarter today, or about 5.5%, trading right around 5.25 today. So getting back a lot of their juice. I know they were looking lower. They were trading with a 4 handle last week, got down to about 470 or so, it seems like. So intriguing stuff out there for AMC. And again, good for 404,000 contracts. Number 5, the other half of the chip zone. Again, we're already halfway through our top 10, only 464,000 contracts on the tape. So not exactly blow your doors off kind of volume today. That gets us to NVIDIA. 447.75, up about $1 today for NVIDIA. You know NVIDIA, it's a bit of a rounding error. Of course, you look at the full range today, and they've moved about almost $8.50. So quite a range. They got down to almost 447 on the dark side, and as high as 455.5. My goodness. So they've had quite the run today out there. Number 4, out to the Amazonians, listeners. They were the one kind of putting the bloom on the rose when Apple was taking it off after their terrible earnings. And Amazon actually blew the doors off. Good numbers out of AWS for them as well. 141.86 right now, up about 230, 1.64%. So continuing their rally. They were as low as 138.95 earlier this morning. So they've had a nice rally here today, and again, good for the number 4 spot. Number 3, listeners, again, you know it's earnings season when this name is ticking into the top half of our top 10 listeners. It is Palantir. They have earnings today. It looks like the market not liking what they're, I think they're after the bell, so we haven't heard them yet. This is just sell off in anticipation, it seems like. Off about 60 cents, trading 17.60. Again, Palantir's had a hell of a run. It's up pretty much $10 from the nadir of its last earnings, so it's got some room to run to the downside if you are so inclined. Good for 677,000 contracts today. And the number 3 spot, number 2. Yes, I said number 2. How often do I say that, listeners? It's Tesla coming in at number 2, 1.41 million. Still pretty hot, still pretty active. Selling off 7.25 right now, trading 246 and about a half. Again, 1.41 million contracts, so it's by far an active day for Tesla. It's not a sleepy day at all. What could surpass that, listeners? It's the old big dog taking the top spot again, taking the crown back from Tesla, saying, give me that back, kid. It's the fruit company. It's Apple. 1.43 million, just barely managing to eke out the victory today. You know what's going on in Apple. Selling off nearly 4 handles again today. A little over 2, about 2.1%. Looks like they got as low as 177 and about a third today. They were as high as 183.13, trading 178 about 20 right now. So again, another weird day. The market not usually able to maintain its green status when Apple is red. They obviously couldn't on Friday. We'll see if that's the case again today. But usually the market very uncomfortable when Apple is red. Doesn't know what to do with its hands on days like that. So we'll see if the market kind of falls apart in the second half today or not. Again, big names popping off this week. Palantir today after the bell. Beyond Meat tomorrow. RIVN, the aforementioned RIVN. Seen more of them in the wild these days, which is interesting, as well as AMC. Bumble, we'll see what's going on in Ladies Love Land. We've been talking about a lot of put rights out there. How are those going to pay off? Duke Energy, a.k.a. the Duck, that's tomorrow. Roblox on Wednesday, as well as Wendy's. Wendy's on Wednesday, listeners, as well as Walt Disney. A lot of W names. All we're missing is Walmart on Wednesday. Thursday, Alibaba backed. Good old backed. How much paper are they? We don't even talk about them on the Crypto Rundown anymore. That'll give you a sense of how much paper they're doing. And Six Flags out there, listeners. So intriguing stuff to be found. Luckily for you, we got the updated earnings move results, and earnings season reports. Let's hit a couple really quickly before we unleash the Eye of Sauron. Beyond Meat today after the bell, 15.75 is where they're trading. Oh my goodness, they're pricing in about $2.50. In the past, they moved $1.50. So Beyond Meat, they are bringing the heat today. Listen, they're already off $1. My goodness. Wow. They are pricing in some juice. Is it faux juice, listeners? I guess we'll find out. Beyond Meat. My goodness, they are after the bell today. So they're selling off $1. They haven't even announced their number yet. Wow, they are coming for this one. Let's go out to a name a lot of you are watching right now. Palantir after the bell today. 18.20, They're pricing in, this is interesting, they're pricing in $2.35. In the past, they moved more than that, $2.62. So how many of you had less juice on your Palantir vol card for this earnings cycle? Probably not many of you, but that is what we've got in store for us this week. Interesting. Palantir, a little bit less juice off the top. I would have probably guessed the other way. Of course, we did have a banger announcement last time and a huge move off that. So some of that could be gumming up the works here a little bit. Let's go out to the Duck, a.k.a. Duke Energy, eighth before the bell. $89.50 is where they're trading. This is another one, pricing in $2.50. In the past, they moved to $1.35. So the Duke, they are not playing with the Duke this time. Man, pricing in some juice in these. And that's why you got to crunch the numbers, listeners. You got to see for yourselves. Bumble, eighth after the bell. 17.18 is where they were trading. Again, flipping the script. They're pricing in $1.80. In the past, they've delivered over $2.50, about $2.55. So 75 cents almost right off the top in Bumble. Wow. That's, again, interesting. So much put writing out there. They took all the juice away out there in Bumble. Intriguing stuff. Let's go out to RIVN, eighth after the bell as well. 25.25 is where they were trading. They're pricing in $3.10. In the past, they've moved $2.19. So a fair amount of extra juice in RIVN as well. Interesting. It's kind of all over the place here this season, which makes for a fun season, listener. Again, we're just scratching the surface. Let's do one more. I lied. Disney, ninth after the bell. 86.30. You guys know all the issues besetting this name these days. Issues with the parks, issues with ESPN, issues with movies and everything else. The strike now. All these things just plaguing this company. 86.30 right now, so kind of a pale shadow of what it was not too long ago. They're pricing in 4 3/4. In the past, they've moved 3 3/4. So a full $1 worth of extra juice in Disney. Is that enough? Is it not enough? What are your thoughts on Diz? Are you harvesting some risk premium out there right now? Are you loading up? Hit us up. Let us know, as it's time for us to let you know what the Eye of Sauron has in store for us. Really quickly, the season right now hanging out at 121%. So it's getting some of that juice back. We were below that on our last report. So looking fairly frothy, especially when you compare it to our 98% long-term average right now. So with 607, I should say, names reporting, we're at 121%. That is unexpected. Again, that's why you have to crunch the numbers, listeners. As it's time for the Eye of Sauron to crunch some numbers, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, let's get to it. Let's unleash the beast and see what we find out there today. Let's go out first to Capri Holdings, ticker symbol CPRI, trading 35.86, up about 35 cents or about 1% today. This is the multinational fashion brand. They actually were founded by Michael Kors. They make all kinds of stuff, probably some Capri pants in there as well. Again, trading up about 1% today. On the year, a little bit of a different story. They're trading $51 a year ago, so they're off nearly 30%. They crushed it last October to about $40, and then they tried to rally it. They rallied it actually pretty hard all the way through that early phase of the year. We had that first big rally through into early February, listeners. This one rallied right along with it, pretty much to its high for the year of 69.25. That was on February 2nd. It hit that high. And then it fell off almost immediately. Obviously, some bad earnings hitting it there because on February 9th, it was trading $49 again. So it went from 69.49, 20 handles in the span of a couple of sessions. And then they took it down again, another stair step to about $40 in March 13th. They took it down again to what appears to be the low for the year, 34.17. That was on June 1st. Since then, it's kind of been vacillating in this $34 to about $38 range ever since. So intriguing stuff. Mr. Meatball, it seems like somebody is betting that the worm is about to turn here in Capri. They got to get themselves some Capri pants because they loaded up on 5,064 of the SEP 42 halves this morning, paying nearly 77 cents. That is through the offer. They were offered at 75 cents, so they had to get themselves some Capri pants. We do have earnings. The earnings are tomorrow before the bell, so this is clearly a pre-earnings tilt at the windmill, listeners. The stock was a little bit lower. The stock was $35.62 when this went up. Man, they are looking for a return to form and then some out here in Capri Holdings. Mr. Meatball, I can't think of someone more well-suited to discuss this one than you. The intersection of options flow and fashion. Those are your two Venn diagrams, sir. What say you?
Yes, indeed. Yeah, no, Capri owns a lot of like well-known brands. It is a pretty big luxury brand. You mentioned Michael Kors, but they own Jimmy Choo, Versace. Those are their three big ones. Versace obviously has a lot going on. Michael Kors as well. Versace's probably their high end. Earnings to on the 10th. This thing was well above 50 not too long ago. This was a $42 stock in June. It was a $55 stock in February, and prior to their February earnings, this was a $70 stock. So they're looking for some sort of return to form here.
Like I said, this is your wheelhouse. The intersection of high fashion and options trading, or perhaps options flow on Darden restaurants. You're my guy, sir.
Well, yeah, certainly 1 out of 2. You're dead on there.
VIX somewhere lower on that list, but Darden restaurants and fashion options paper, you're my first call. Does that give you a warm fuzzy, sir?
Oh, absolutely. That just throw Crocs on it. There's another company.
Yes. Crocs, you're more mid-tier on my call list, but yeah, these ones are definitely up there. Darden restaurants, I'm hitting you up 2 a.m. That's your
favorite stock to watch blow.
That's your jam right there. Darden restaurants. Can't get enough of those unlimited breadsticks over there in the old garden. All right, let's keep on rolling. Let's see what else we can't get enough of. Man, this next one, listeners. Wow. Yeah, this one kind of just shows the magic of timing and perhaps not having enough time, listeners. Let's go back to our last show. We're not going very far. We're going all the way back to last Thursday. Who can even remember the heady days of last Thursday? We were all so young and innocent. We had no idea what lay in store for us, listeners. But if you can remember that far back, on that show with the Flowmaster, we talked about some Expedia post-earnings call love. I'm not sure if we got to this on the show or if we highlighted it and we just ran out of time because the Flowmaster had so many others. Either way, we had a couple of E-related names that we highlighted that Thursday as well. This was one of them. This was Expedia Group, ticker symbol EXPE. Let's see. I'm not going to tell you where they were. EXPE, excuse me. A year ago, they were trading 105 and change. And then they sold it off hard in December to 82.39. That was their nadir. Then they rallied it again, 121 in February. So they did a lot of living, 40-handle rally between December and February. Then they came for it again, got down to about $90 again in April, hung out there for a while until May. Then they started rallying it again. June 8th, it got up to 111, 112. Then they rallied it again in July to 122.5. And then they came for it, listeners. They came for it hard. They crushed it back down on August 3rd to about $98. So Expedia just feeling the brunt of some lack of market love. More sellers than buyers, as the kids say out there. And what we talked about on the show on Thursday, 5,261 of the one day, the August expiring on the 4th, 103 calls. The stock at the time was $99.11. This was immediately after earnings, which is always a dicey time to gobble up some premium, listeners. And they paid 53 cents for these 103s, Mr. Meatball, expiring in one day. So a 24-hour post-earnings roll of the dice. What could go wrong? Turns out a lot. And then more if you waited a day or two. These got close. They got so close, listeners. The stock rallied, almost made it, got up to 103.19 the next day. That's where it closed. Looks like these people, though, they kind of did the play a lot of you folks like to do. The stock opened the next day it was rallying, but not enough. It was up to about 102.5. These people decided, you know what, I'm going to take off half the trade. I know that's what a lot of people like to do. So with the stock around 102.5, they scratched 2,500 of the about 5,000 lot that they bought. They scratched them for 52 cents, so they lost a little over a penny on those. So they scratched half of it, and they said, you know what, we're within half a buck. Let's let the other half ride. And the stock got there, listeners. The stock got to 103 and about a quarter or so, close to it. But it just wasn't enough. It wasn't enough for them to, and it didn't happen. It happened late in the day. That's the other problem. When you're doing a 24-hour trade, you got to have stuff happen pretty quick. So they were right, but not right enough, and not right certainly within the right time frame. So they ended up losing about 38 cents on the other half, the other 2,500. They dumped those for about 15 cents. These prints are all over the place. They were 20-cent bid. The stock was $13.21. And they sold them for 15 cents. So that's a bad fill, however you want to do the math out there. So obviously, Expedia, not the most liquid of names on top of it. That's also going to hurt. But just intriguing stuff. So Mr. Meatball, they bought these calls. They were on the right tip, just not fast enough for these calls to make money. I mean, the stock was 102.5 the next day. They bought them when the stock was about $99. So they got a nice pop. Just they were maybe too optimistic with their strike price, too optimistic with their time frame. Even worse, the stock today, just one session later, even just not halfway through the session, not even over yet, is 107.66. So they have just bought another week, a couple more days, Mr. Meatball. They would have been swimming in money. And
you got to get your duration right, and that's what happened here. They missed on duration. And they needed to buy a week later, pay a little bit more, buy a few less, and they would have made a ton of money. Instead, they went for kind of the little YOLO trade and didn't get what they were looking for, unfortunately for them.
Yeah, I mean, if they had maybe just bought the 102s, there were so many things they could have done that could have been better. They just struck out on all of it. So they ended up, instead of making, I mean, the stocks hit 108 and change today. These calls would have been about $5 in the money. Instead of just printing money, they instead lost about $100,000 because they scratched on the first half of their trade. They lost about $95,000, a little more if you add, and they lost obviously about a penny on the other first half. So it rounds up to about $100,000 on this one. So that's just rough, listeners. You're right, but not right in the duration of your trade, and you just got a little bit too excited, too big for your britches, whatever it was. And your strike and or duration were both poor. And it ends up, I mean, you missed this huge move. That's a shame. Speaking of huge moves, let's go out to our last one. This is from a week ago. We got a lot of trades to pay off just in the past week. From last Monday's show, listen, we talked about somebody or a whole bunch of someone's loving a whole bunch of weekly puts in SOFI to the tune of the AUG 11 puts expiring last Friday on the 4th. Paper gobbling up 7,000 of them for 31 cents. That kicked off the session. The stock at the time was 11.43, and then they kept that parade going. They had earnings before the bell that day as well, listeners. A total of 57,000 of these things traded on the day. They were looking pretty good. Obviously, you know what happened to SOFI. They sold off pretty hard, trading about 9.25 right now. So the stock was 11.43 when they started buying these, so that's pretty good. They started dumping them the next day, so they were already getting in and getting out while the getting was good. For prices around 40 to 65 cents in that range, they started dumping, a couple of thousand at a time. And they kept that up until the end of the week. There were surprisingly, 13,000 of these puts still open on Friday by the expiration. The stock ended up going out $9.50, so nearly a $2. There was $11.43 when they put it on. $9.50 is where it went out. So by any stretch of the imagination, 31 cents for these puts, you're going to do all right. And the 13,000 at the end looking pretty good. If they bought those back in that palooza, which they probably did. That's about $1.5 million on those. Now, obviously, you're not just buying those naked. You probably got some stock with that. So in which case, maybe a little bit more of a frowny face on this trade. But still, the puts did what you wanted them to do. They made money, even if you kind of scratched a lot of the early ones. If you had held on to those ones that you scratched for 40 cents on Tuesday, you're looking even better now. So again, an issue with execution on this one. But it's hard to fault people for taking some profits. We've seen people leave a lot of money on the table these days. Mr. Meatball, what are your thoughts on these SOFI puts? Well-timed. They kind of got a little bit ahead of themselves, started scratching them early, but then the latter portion made up for it, sir.
Yeah, no, SOFI really did not have a great day on Friday, and they did pretty darn well. So nice trading. This is one where they got their duration and timing pretty much dead on. So go them.
One might say they took the option pit course.
Exactly.
There you go. Free plug for you. How's that? How's that for a little bit of love?
I like it.
For the land of the pit. As we keep on rolling, how about a little bit of love for Uncle Mike? Because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, it's Monday, listeners. It's time for Uncle Mike to hold court. Today's topic, listeners, you get a full 10 minutes on the origins, the genesis, and the evolution of the greatest party of the summer, known as SummerSlam. Have at it, Uncle Mike. The floor is yours.
Yes, SummerSlam. 10 minutes isn't enough, so I'm going to have to divert to something on a modified risk reversal for today. So I've talked about this on the show a bunch, from the concept of how if you don't get any maintenance release at your broker, you're better off selling an in-the-money covered call. Typically, there are exceptions if there's skew involved, you're typically better off selling an in-the-money covered call as opposed to an out-of-the-money short put. Now, I'm going to take a random example right now. I'm going to use SPY. Of course, I have my whole life as an SPY in some way, shape, or form, but these specific strikes I'm not in right now. I'm just taking a random example for purpose of the strategy block. And so let's say that you wanted to have exposure to SPY and you wanted to have a little bit of a cushion in case it pulls back. Well, traditionally, a risk reversal would be a trade with which you could consider, to where you could sell a put option below where the market is and then use the money to buy a call option slightly out of the money. Now, when doing that, it works very well if you can. I mean, if the market goes your way, anything will work well, but the risk of the trade itself would work very well if you can get maintenance release. Now, what does that mean? It means that, let's say I were to sell the 390 put for October. Once again, I'm totally making these up as I go. But if I were to sell the 390 put for October, right now I could get $1.72 for them. And maybe that's good, maybe that's bad, who knows? But $1.72 is the premium with which you would get. However, from a synthetic standpoint, let's say that you bought the underlying and you sold a covered call at the 390 level. Well, by doing that, the cost of that would be $385.28. Now, by the equivalent, that means that's the equivalent of getting the same premium as $4.72. You're getting an extra $3 by doing that. Now, the reason for that is that if you have a short put, you have money sitting in cash. If you're allowed what's called maintenance release, then you can use some of that cash to buy a government treasury. Typically, it's a hassle. It depends on who your broker is, but a lot of times it is a hassle to get at the retail level. At the institutional level, you can get it a little bit easier, but at the retail level, from my experience, it's kind of a hassle. So if you're not able to get that, then you're usually better off selling a covered call. And here's the other part of it is, let's say that if there is a dividend involved, you'd get the dividend as well. But let's just assume for a second, for easy math, you can't get the dividend. Well, by doing that, you're getting an extra $3 for the same risk. Meaning, if the stock were to go to zero, now I don't think SPY is going to go to zero, but if theoretically it did, you'd be have $1.75 for taking on the risk at 390 on the short put side of it, because that's where your obligation is. But on the covered call side, you would come out ahead $3 greater because you had a net profit of $4.72. Now, I know we're getting kind of deep here, but I just want to go through the point that, to reiterate, typically selling a covered call is going to be better than selling a cash secured put in this market because of the reasons with which I mentioned. Once again, if you're getting maintenance release, that's totally different. Now, a strategy that you can use a lot of times is that you can sell that put option. Let's say you wanted to have a cushion all the way down to 390. You want to have a roughly 15% cushion on the S&P, but you're willing to give up a little bit of the initial upside. Well, let's say that you wanted to have upside from $464 in SPY. You could buy the 464 call for a little over $5. If you want to make it totally even money, let's say we go up to 466, you can buy that for $4.68 I'm showing. That would be the profit that you would get from the covered call. So here's how the trade would work. If SPY stays between 390 and 466, you get nothing because of the fact that your covered call will get called away and your 466 call is going to expire worthless. If it goes below 390, you would have that risk starting at that point. If it goes above 466, you would have all the upside. So that's a way with which to get a risk reversal using a covered call instead of a short put. If you wanted to make it even money on the short put, you'd have to go up to roughly the 476, 478 level to get a call option at that price. You'd have to have a wider amount of time until you actually got any upside. So that's just another way with which you can set up a risk reversal in this market. Now that we have interest rates, things like that, you need to shift your trading a little bit to take advantage of certain areas of the market. And row matters. And that's the strategy block for today.
Row matters indeed. As we keep on rolling, listeners, into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listen, let's do it. Let's go around the block. Let's pay off really quickly our question of the week. Last week we asked you, VXX had a rocky year last year, to put it mildly. Are you trading it again or have you moved on? And no, I trade other products, took it with 41.9%, followed by number 2, no, I still don't trust it, 22.6%. So you're talking over 64% of you just out of VXX entirely. Yes, they lured me back in, 19.49%. And yes, I never stopped trading it, 16.19%. So intriguing stuff out there. This week, listeners, we're asking you, we just talked about a bunch of them today. We've seen a resurgence of volume in AMC and GameStop and SOFI and Mara and all the names that were super popular back in the 2021 meme stock era, which raises the question, is the meme stock frenzy back? Very simple this week, yes or no. Let's go out to the greasiest of Meatball. Mr. Meatball, is the meme stock frenzy back? Yes or no? A, for you. B, what do you think our audience is voting for? And then C, what are you keeping an eye on for the rest of the week?
We're seeing maybe it's like the meme stock dead cat bounce, because Nikola and Tupperware and Yellow Trucking and all these names that are going to go bust, they have a bid. Open Door is another one. So there's definitely a little bit of a hint of the return of the meme.
So you're voting yes? You think our audience is voting yes?
I think they might be.
And what are you watching for the rest of the week, sir?
We still got a lot of earnings and CPI this week. That's going to be the big one. I think a lot of people are paying attention to that. They want to know what that means, what that's going to do, and what that has in store for the overall market.
And Mr. Uncle Mike, same question for you, sir. Is the meme stock frenzy back, yes or no? B, is our audience voting that way? And C, what are you keeping an eye on for the rest of the week?
I would say the audience is not voting that way. Is it back? I'd say a definite maybe for right now. We'll see. I'd want to see some follow through before I said it was back, if you will. And then in terms of what I'm watching this week, the 4,500 potential magnet, and to quote the legend Bing Crosby, to see if the market will buy a bond, seeing if that will happen.
Uncle Mike singing Bing Crosby. I did not have that on my docket for the show today. Listeners, right now, looks like you folks are about as split as our panel is here today. 52.9% so far saying yes, 47.1% saying no. Again, this just went live right before showtime, so it's in the early blush. If you agree, disagree, you want to make a comment on there, get on over there at Options, the place to go to make your voice heard. That music means we are done, at least for this show for today. Don't worry, back again in a little bit with the crypto rundown. But before we get there, let's go around the horn. Let's start with the greasiest of meatballs. Sir, if folks want to check out all of your good content, where should they go? What should they do?
Yeah, just go to optionpit.com. I'm putting out the Trader's Edge every day. Good written and video content worth your time. Come and check us out.
Check them out in the land of the pit. And if they want to go to the land of Uncle Mike, Mr. Uncle Mike, where should they go? What should they do?
Come to St. Charles, Illinois, or if you can't make it to the city in person, go to my website, stcharleswealth.com. If you're looking for a financial advisor who likes the option product, uses the option product, if it's appropriate for the client, of course, and will occasionally sing some Bing Crosby.
He'll sing to you. He'll load you up with unhealthy snacks, as he mentioned on the last episode, including some tasty and delicious gyros and lemonade. Only one place to go to find it all, listeners, stcharleswealth.com. That's going to do it for us here on the show. Back again in a little bit for the crypto rundown. Got a double dose coming at you tomorrow as well for all you pro folks. A pro Q&A with the Oracle of New Hampshire answering all your questions about back testing and analysis and how to execute strategies profitably. So that should be a fun one. Always a popular guest. You guys have a bunch of questions for him. We're going to have the second part of the crypto rundown tomorrow as well. The folks from Coinbase US Derivatives will be talking to us here about all the fun things going on in the world of crypto derivatives. So join us for that, a special kind of two-parter this week for the crypto rundown. Wednesday, of course, back live with some OBC in your ear holes. And then we're back again on Thursday, another episode of The Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.